Okay, so this video is for D. Jureski. Hopefully I'm saying that right. But he's in Discord, he's a stratter. We DM back and forth. He had suggested a video where I draw some broadening formations and kind of walk through price action again. I'm going to use the 1 minute, the 30-minute, and the 195-minute time frames. The 195 is like the 4-hour, except 4-hour, if you're trading that, it kind of overlaps days. The 195 is effectively dividing one trading day into 2 candles. So both of those candles will close on the same day. So I'm just going to draw my broadening formation here on the 195-minute. And I always tell people there is no perfect science to this. Rob says that as well. And I would generally try to draw it so it looks achievable. Sometimes when you draw a broadening formation, for instance, if I was to draw it like this, off the wicks of these 2 candles, that's insane, right? Like price will probably get there, but not real soon. There'll be lots of other candles that change the trajectory. So I'm going to delete that. And then Rob said he usually likes to draw it from a 3 candle. So realistically, I guess this could go back to this 3 right here. Something like that. So you'll see with Apple here on the 195, which again just divides the trading day into 2 candles. It really is at the top of that broadening formation. So when I see something like that, I will take that top line and I'll clone it. And if there's another candle, like in this case, we have this candle that I kind of cut out because I tend to cut out the extreme highs and lows in my formations. I'll just take it and clone it and move it out to that other candle as another potential target. And one of the secrets to drawing candles and kind of looking at a range for the following day is if you have your cursor on a candle, and I think this works for any trading package, and you move it to the right, you can then see where those lines intersect. So in this case, that's right around 140. So let's just assume that we open here. If we're looking at it kind of obeying this line that crosses at 140, maybe it gaps above that, and then we're trying to figure out where it could go beyond that. Drawing these lines and kind of seeing when your cursor stops and how they intersect can be very, very helpful. And I'll try to show you another example of that, just because how this lines up right at the top of the formation, it's maybe not as useful as it sometimes is, but that's how I would draw that. And you'll see if I switch to the daily, those lines are going to be spot on, because once again, the 195 is just the daily candle divided into 2, basically. So I'm going to switch over to the 1 minute, and you can draw broadening formations really on any time frame. So a lot of times for this kind of thing, I will look back to the previous day, and what I notice is there's kind of this uptrend. So even without having this information, you know, because I drew it here, Friday's price action didn't happen yet, but I see that there is a fairly strong trend right there. So I draw that, and then on the bottom side, I don't think where I would draw that had I not known where the price action is. Something. Maybe I would have drawn it something like this. And you'll see that comes awfully close to how price In fact, it tapped it right there at the top. That happens a lot, really, on any time frame. So the broadening formations are very useful. I forget to draw them because I can see them most times, but it really can be helpful to draw them. One reason I talk about the 1 minute and where I think it can help new traders, even if you don't trade it per se, if you watch it, the cool thing about it is you will see all these strat signals play out over and over and over and over again. So the number of strat signals you'll see on a 1 minute obviously is much greater than an hourly chart. Hold on a sec, I somehow got myself all tangled up in my headphones. Anyway, so just your familiarity with seeing the patterns can be really helpful. Let me turn the volume profile off. I don't really need it right now, obviously. Okay. And I don't need the moving averages either. I have a 21 exponential and a 9. Where they can really help, though, is for newer traders, just to get a good feel for price reversals and that kind of thing. So I'll talk about that in a second, but here, let's just take a look at the open on Apple. And I may have talked about this the other day, but it never hurts to revisit how stocks move and how we determine trend and all those good things. So we see price open and we've got a high, a low. Then we get a lower high and a lower low. Had you tried to take that short, though, your magnitude, wouldn't have been very much. And we see that by the broadening formation that I drew. And when we get to the 30-minute chart, you'll be able to look left and kind of see what that looks like. So then price turns around. Now we've got to wait for potential signs of a low, a high, a higher low, a higher high, then a TTO and a strat signal. So here's our little TTO, and that's a TTO back to trend, okay? So I can see the trend line, but I'll draw it for you there. So our little strat signal right off the trend line, you can go ahead and jump in. Proper way is to wait for that wick. I oftentimes, with these smaller time frames in particular, will do it on the body. Just know that if you do it on the wick on larger time frames, you can certainly cause yourself a problem and get faked out. It's just that I trade options, so I'm looking to get into that option before price explodes. And if you wait till the wick, you'll have missed quite a bit of movement. So I get in here. In this particular case, sometimes I'll set my stop right below that candle. Sometimes it'll be all the way back to that wick. Really, the ideal thing is to put it below this wick. With Apple, you can do that. It's not going to kill you. Amazon, I'm keeping a tighter stop. If it goes against me, it's not the right trade or the right entry. I'd rather get stopped out, lose $100 and redo it than end up quickly down $300, $400, $500. So you get into your trade here. Your magnitude, if we had drawn that broadening formation, is the top of the broadening formation, and you can see it hit it perfectly and failed. And so for these quick morning trades, once it hits magnitude, I'm out. And that's pretty much true for any trade I get into. Where most traders go wrong with trades is they get in, they don't know what their stop is or how they're going to protect their capital. And as a trader, your number one job is to protect your capital. So that's problem number one. Problem number two, most traders just get in and say, okay, I hope I make $200 without having any idea what the magnitude on that particular trade is. You don't ever want to do get into a trade unless you know those two things. So at any rate, I get in, I take my profits off. When I take a trade and it's a winning trade or a losing trade, I usually give myself a quick second before I jump into something else. Just because I want to make sure my head's right. Sometimes you get overzealous if you've had winning trades and then you take 20 more trades thinking you're all going to win. Sometimes if you have losing trades, you get in your head about, gosh, if I take another trade, I'm going to lose. So I just give myself a quick second to regroup. But let's say you did that, now you're ready to trade again. Well, once again, you don't need moving averages to see this, but we're now looking for, if this is going to reverse, a high, a low, a lower high, a lower low. We don't get a lower low. Let me remove some of these lines because this can get kind of messy. We don't get, this is our low, a lower low until over here. So, and this is actually kind of nice because it's right after a TTO. This was a positive candle back the other direction. So my entry here off this inside candle would be as soon as that breaks for my 212 reversal down, I enter, trade starts working. We do see that it comes back up against me. But again, and this is for newer traders, it doesn't cross my moving trend line. I don't necessarily need this, but as a newer trader, it might be hard for you to see it and or draw it when you're trying to concentrate on so many things. But let's just draw it. That's what it looks like. You can see the 21 EMA can serve as your moving trend line. So we're in our trade. It does, my stop's going to go, by the way, here. Okay, does come back up and almost goes against me, but I don't get stopped out. So this little area actually ends up being a really nice place to add. And you see this a lot with stocks that are selling off. They'll go down, they'll come back, retrace, and they move almost in a horizontal manner over before they fail again. So my entry on this trade, let me just move this for a second. My entry into this trade would be, the ideal one is that the wick is a smaller time frame. I'm trading options, so I'm going to get in. Why do I have that extra one? Right here, and you'll see that that trade works. My stop now is right here. And the reason you want to add, and I'm talking more for people that trade options, is this particular retracement is bigger than where your entry was. Your entry was right here on the failure of this candle, and then it comes all the way back, but it doesn't take your stop out, right? Remember, your stop is right there. So though it didn't take your stop out, it would have probably eaten any profit that you had. So you're going to need an add in order for this thing to go your way. And the minute this thing goes, once again, is when I add. I don't want to add while it's still going against me. There are times where it will fake you out. You'll get in when it comes back your way, and then it'll turn on and go back. I have had that happen. But 9 times out of 10, a strat signal back to trend works. In other words, a little TTO back to trend, you get in on the black candle because we're looking for a short, and that's, back your direction. So how do we then determine magnitude? Well, looking at this on the 1 minute, I can see my magnitude is going to be right in this area. Oh, and how do I know that? Darn it, why isn't this? Because there's kind of this little area where right near the open, it's the most likely spot for it to come and retest. You'll also see that this move up the most common retracement is going to be 25%, and then next in line 50%. And this is maybe slightly more, but it's still within roughly that range. That's where I would have set my target. Then you see this little thing. Whenever I see price action chopping around, I don't care what time frame it's on. If it's the 1 minute, 195 daily, I put a little box around it because that's telling me price is thinking and it's getting ready to make an explosive move in one direction or the other. And so what you see here is it does in fact start moving up out of that box. And there isn't a fantastic entry into this because I like to see a low, a high, a higher low, although you have a high, a low on this one candle, a higher low, a higher high. So really in theory, when this next candle starts off right here, as soon as it breaks this little hammer candle, in other words, right here, you can take it long, and then your stop, your stop goes below the body of that candle. So just keep in mind that, and I'll hopefully be able to find an example here, that the smaller and closer this candle is and less of a wick it has, the tighter that stop can be. Again, with Apple, not as big a concern. Something like Amazon, it very well might be. So how do I know what my target is? Well, I'm going to look left and I'm going to draw an area like this. Whoop, and hope it stays. And that's my magnitude on this particular trade. This is looking at the 1 minute time frame. So what happens along the way here is I get a pullback, and this would scare a lot of new traders. You see that there's one close outside the 21 EMA, and then it turns around, comes back, and goes your way. That happens a lot, and that's just market makers trying to stop you out. My rule, if you are using the 21 EMA, is there need to be 2 closes outside. Some stocks you can afford to do that, some can't. That's my general rule. I'm just not going to get into 20 exceptions. So what I would do then, the minute it comes back over this inside candle, I'm going to add right here for that final push. And then I'm out on this big candle as it pushes. With options, it's very important to take those profits off the table, if at all possible, with a nice strong push candle in your direction. Then we kind of keep going, looking at the chart. And one thing you can look at, I think it's helpful on a 1 minute, even if you don't trade it, just to look at the candles, is to look at what certain candles do price action wise. And what do I mean by that? So when we're looking for reversals, see how we get this hammer, it still makes another pullback, but this hammer didn't take out any more than one level of candles, meaning it encompassed the whole body of the previous candle, but that's just one level, the level of that previous candle. Then we get 2 down candles. This next candle pretty much takes out the previous 2. Following candle takes out all of these guys, really strong candle. So when price is reversing, you'll notice this scenario happens pretty frequently. First, you get 1 candle that's taken out, then maybe 2. Then when you get a candle that takes out more than 1 of the previous candles, that's a very strong sign that the price is reversing. But with this type of scenario, we do have a low, a high, a higher low, a higher high. And then you can get in, boom, to go back long and depending on the stock, you know, if it's Apple, I'm probably putting my stop here. I may put it below the other candle if it's a bigger candle and it's Amazon, and if I'm wrong about the entry or what have you, I'd rather have a very small loss and get back in than goof around. So this particular setup would be easier to see. Hold on one second. I'm gonna sync these to a 30-minute time frame, and we'll look at that. I'm just going to look left here to see if there's anything not so much. So on something like this, then, let's say I had taken that off the inside candle, where am I going to get my magnitude? Well, I am going to look at a 195-minute chart. And let me just see. Where, oh, I don't want the 30, I want the 195 minutes. Okay, so off the 195 minute, had I gotten into that trade, which would have been right here, I'm looking left and I see my magnitude is right about here. It ended up busting through that, but that's how I see my magnitude if I'm on something like a 195 minute and I don't know, I'm sorry, if I'm on something like a 1 minute and I'm kind of in space like I was here going, okay, there's nothing around for me to compare it to. I have to jump on the 195 or so. And I wouldn't get into that trade without checking first. I always look left. I always know what my magnitude is. That's critically important. Let's just take a look at how this chart unfolds on 130 minute, a 30 minute. And this is kind of interesting. We had this hammer counter shooter. And when you see that in an uptrend, to me, that's just like price thinking. Spazzes out that way, spazzes out the other. Net, it didn't overly go anywhere. So all of this to me, just look, why does it do that sometimes? Like price kind of screwing around. And then we get, so we've got a low, a higher low. We haven't gotten a higher high until this candle. But we have this little inside guy in the 30s. So you could have gotten in on the break of that wick. And again, you would have gotten your magnitude by looking left. So hopefully, oh, and I just noticed here's another one of the kind of little pop out of the box scenarios here. That when you see price get out of that consolidation, it explodes back to the upside. So what I'm going to do is at Dudereski is I am going to do this Apple vid tonight, and then I will do one on the others that we talked about, Facebook, Spy, and maybe I'll do one on Zoom. But I'll just do maybe one a night, short vids, and get those posted, and hopefully they help. Talk to you guys soon.